Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson, and let's catch you up on where we've been with the markets lately. Been about a week since I did my last up-a-date. So we have seen a lot of choppy action. Looking at the 60-minute chart in front of you, you might think, hey, the bulls have done pretty well. And you know what? If you've been playing the Dow, you're right. The bulls have done actually pretty well. Here's the issue. This is not true on all of the other indices. The Dow's been great up until maybe the last day or so. But the Dow's been great, climbing steadily. We have not seen this kind of confirmation from the other indices yet. A little bit here and there, not quite as strong as what we've seen in the Dow. So, as it is, today everything was down, just in what could be just a pullback of some sort. It's really early to tell yet exactly what this is going to be. You're going to have the bears, the perma bears, that is, that are going to be claiming, oh no, major drop, major drop. You're going to have the bulls going, yeah, just a pullback before we really get into the Christmas rally. I'm going to sit on the sidelines, let the markets tell me which way this thing's going to go. I think it's pretty well defined. The NASDAQ is about as clear as it can get. That's an easy index to cover, and that won't take us long tonight. The Dow here, you can see the consolidation that we had leading up into December. And then we had this nice break up and over the 13.1 mark, which is what I made mention of in our last video. Breaks up and above this area was your go long moment. This worked out beautifully. Couple hundred points here on the run before you might have, taken some profits. Now, if you got in and grabbed 50 points or 100 points or whatever, who cares? Merry Christmas. You made something on the market. Has not been an easy thing to do. If you've made money in December so far, congratulations. That's not a common thing right here. Been a lot of people that have been struggling when it comes to trying to make money in this particular market. So been very, very difficult. All right, so now we're getting this little pullback. We've fallen very nicely back into this support zone here, right at the 13.1. You see the 50-period moving average. You see all of this previous area back here. This 13.1 is really a nice, 13.150 is where we close. 13.1 is where we're going to be aiming for coming into the next couple days if the bearishness continues. Not convinced it won't. We could see a little bit more, but it doesn't break the bull case. Let me make that clear. If we continue to drop, as long as it's not precipitously in a major hammer to the downside, wow, look at that, major selling. Yeah, listen, nothing broken from the bull side here. This is just a pullback. Fridays are a lot of times are up days, so don't be surprised if maybe tomorrow the bears maybe lay off a little bit, or maybe they start the day a little bit bearish, and then by the end of the day we maybe bounce off this 13.1 area and we head back up by the end of the day, where we doji on the day, or we're up for the day, or wherever the case might be. But don't be surprised if maybe the bulls try to make a run at this and hold this level right in here on all of the indices by tomorrow close, and we'll see what the weeklies look like at that point. Just keep in mind, very nice little pullback right here. Nothing to be too concerned about if you're bullish. Here's your mark. Up and above here, down and below here. That's it. Long and short. It's really going to be pretty simple. And here it is on a daily. We had this beautiful run up into this higher area here. And what is this? Well, look. If I drop that line just a little bit, you'll see that what we're really working on here is a potential inverse head and shoulders. What this would end up being is the start of the right shoulder in that particular formation. Here's what I don't like. It is so pretty. It's almost too obvious. I'm really struggling with falling in love with this pattern. Now, does that mean I'm not going to take the trade? Of course not. Are you kidding me? That would be crazy. Of course I'm going to take the trade. So if we get back up and above this area here, it's possible that we do have some sort of an inverse head and shoulders on the horizon here, and we're going to go ahead and play that. Oh yeah, don't be fooled by that. We're going to definitely go ahead and go long there. But I'm going to manage it. I'm going to watch it closely just to make sure that it does move and stick with that particular push to the upside. That's what you're really watching for. Does it move and does it stay above this area? Because what we saw here was a nice push up followed by of this little reversal candle, and that was all confirmed today. So the bears are potentially going to pull this back down, maybe into this, like I said, 13.1 area. If so, that builds the right shoulder very, very nicely. We could go a little deeper than that and still not break anything down into the 200s in here. But yeah, this is definitely what you want to be watching, and this is clear on all the other indices now too, is this inverse head and shoulders pattern that everybody's going to be watching for. And of course, the bulls expect to see it break upwards and fulfill this inverse head and shoulders because we're coming into Christmas and the Santa Claus rally, and that's just historically what happens. I don't blame them. I would have to say I'm more neutral to bullish because of those exact same reasons. Coming into the Santa Claus rally, why not? Of course, I'd be a little bit more bullish at this time of year. But it's almost too pretty. The markets love to fool you into things like this sometimes. So once again, not saying don't take the trade. By all means, please do take the trade. Don't miss that, because if the inverse head and shoulders is legit, this thing's got a long ways to go. And that, pick an indice, NASDAQ, SPX, I don't care what you play, whatever your poison is, play it. Don't miss it. But this thing is almost too pretty. So if it's going to fail, it's going to fail in the next, probably in the first couple days after it breaks the neckline up here. And if it does fail, it's a trap. It's just one big, large trap. So you want to manage it. You want to be careful of the trade, but you definitely want to take the trade at the same time. Just put stops in place, guys. Put stops in place. Leave them there. Let them do their job. If you get stopped out, so what? If this is a head fake, if this inverse head and shoulders is a head fake, believe me, you don't want to be a part of it, and you don't want to sit through the pain. Let it stop you out with a $100, $300, $400. I don't care what kind of loss you take on it, but don't sit through a $1,000, $2,000, $4,000, $8,000 loss. Don't do it. It wouldn't be worth it. You can always get back in. That's the beauty of the markets. All right, on with the rest of this. Okay, so here's the NDX. Very, very clean in through here. 2,700, 2600-ish, 2620, 2600, 2620, right in here, whatever. Below here and above here, that's going to be your mark. NASDAQ's pretty simple. Look how choppy sideways it's been. Even before December started, we got into this 2600 area, and we've stayed there ever since. If you went long the NASDAQ in this area, you haven't made anything really. If you went short, you really haven't made anything. If you stayed with it, you're basically break even. We're trapped between 26 and 2700. 2650 is where we're at right now. All of the moving averages are converging upon one another, setting up this gorgeous inverse head and shoulders. It's almost too pretty. This is what we're going to be watching going forward. Pretty clean, guys. This is about as simple as it gets. Above here, below there. On to the weekly. The NASDAQ weekly is just barely holding this 50-week. I am curious to find out if it'll actually continue to hold it before this is all said and done. But so far, so good. We'll see where it closes because it's a weekly. Let's see if it closes in this area. If it does, look, we could have a move up and a high base happening. That's what this formation is going to be. If it holds in this area and doesn't have a major drop tomorrow, it's a move up and a high base for all intents and purposes, bringing us into next week, which is options expiration week. And that's, like I said, could set things off. 2700 still doesn't matter which chart you're looking at, still the area to be looking at for a long. SPX beautifully positioned here within this channel. Just a very, very pretty move right here. Looks gorgeous. Okay, so this is probably one of the prettier looks as well. Sitting very comfortably right here on the bottom side of this channel. Not a lot of wiggle room here. All right, so while we have this big inverse head and shoulder setting up on the SPX, which will look more obvious when I get to the daily, we also have a little tiny mini, maybe head and shoulder setting up here. That's something to watch on the 60-minute. Don't miss the forest through the trees here, guys. Don't get overly bullish thinking, oh, yeah, and then get killed. Okay, you got to be conservative in here. There's a strong bear case, and there's a very strong bull case. I can see them both. Don't get caught. Wait for the moves. Looking for drops below here, looking for moves above here, and you'll be fine. But be patient. Don't get caught in the chop sideways. They're just going to try to trip you up here. So back and below these areas here for your short and above here for your long, you can see on the daily this beautiful inverse head and shoulders that it's also setting up. We had a break of it actually yesterday, and it didn't hold. So shooting star, whatever you want to call it, There's a reversal candle and it confirmed today as we came back into the 50-day moving average. So if the bulls want to be serious, they got to push that thing back up. But as it is, we still could be working on left shoulder, head. This would still be just the right shoulder if you wanted to build your head or your inverse head and shoulders that way. VIX daily was up today, confirming the move we saw down, so that's a good thing. Nice to see some confirming factors within this move, but yet, come on, still in the lower end of my range for the VIX. This 15 to 20 is all complacency for me. The 15's lower end of complacency, and we're just barely at 16. So look, there's just not a lot of fear down here in the market right now. Even though we confirmed the move up or the move down in the markets with a move up in the VIX today, yeah, there's no fear. There's just and it hasn't been for weeks. Look, yeah, whatever. We came close to almost touching the 20 not too long ago, but I mean, really, come on. Nobody's really scared. I think a lot of other people are also expecting some sort of Santa rally as well. So until this VIX really spikes, especially gets above 20, I'm not real concerned about major fear in the markets, if you will. FAS played pretty nicely to the long side. Made a little bit on it. Didn't get quite the break I was looking for, but still playable. Now we're back below this trend line here. We did finally break it, and we've held it for a little while. So your next moves are going to be back below 110 on this. However, if this monster can push its way upwards and get back above about 115, that's playable to the long side. But to the short side right now, it's 110. If you look at the daily, you can also see the little jab above and the push back below. That's why I like this 115 mark. For me, it's kind of the neckline of the inverse head and shoulders that everything else is setting up with. Back below 110, you're going to be careful of these moving averages, but there's a good buck and a half to be played in between this move right here, and there's no guarantee that it'll stop at these moving averages, so you just have to be conscious of the fact that they're there and look for the play there. So back below this 110 and back above 115 would be my suggestions on those. FAZ is also setting up this really nice inverse head and shoulders right here. 1650, that's going to be your mark. I think you should be watching that one to the long side. As you can see, we did have this beautiful push up and we've stopped right up here at what a perfect overhead resistance. It was support here in the past, support. Now it's been resistance, and it's also setting up a really nice look as well. So 1650 on this one. Now we had a good short below, what was it, like 1650 on the way down. We had a good short below 1650 and 16, but you can see it dojied out. We didn't get a hold on this move, so if it gets back below 16 though, I love it short. So I'm going to go 1650 long and 16 short, and I think that's pretty definite in through here. I think there's good opportunities one way or the other if it'll break one of those two levels on FAZ. That does it for this video, guys. You should be all caught up. That's what we're looking at. That's what we're sniffing around for, trying to make and find some jewels in here to make some money. With this choppy sideways action, it's been brutal. I'm not a big Dow player for the most part. I usually do the SPX or the NASDAQ, and guess what? The NASDAQ's been a hand chopper right here. You want to talk about getting your hand chopped up. This is it. This sideways stuff, it's a killer. So I'm like everybody else, just sitting around waiting for a break one way or the other before I really start to get serious about trading the NASDAQ again. All right, that'll wrap it up, guys. We'll see you again in the next video. Oh, newsletter, 28 bucks a month, guys. Super cheap. Buck a day, great information. I do videos like this every day for you, except for Saturday, filled with information about the market, current market status, where we're going, where we're headed. We look at stocks, we look at the Russells, we look at gold, we look at oil, just a lot more information in those subscriber videos. Very much a value-added service. You can try it and see what you think. You do not have to have a PayPal account. If you want to pay in any other form, whether it be check or money order or over the phone by credit card, that's great. Just let me know. Send me an email. We'll make arrangements. I have people do that all the time. Not everybody pays by PayPal. So this allows you to control it a little bit more too. If you want to just send a check or whatever, it's easier for you, fine. That's great. That works for me. I'm really not all that particular. The other product I offer is the mentoring. The mentoring is basically a full-fledged college course in trading itself. It's you and me one-on-one. It's all done live. There are no videos to watch. It's you and me going through a bunch of information, much as we would in like a textbook or something to that effect, on what amounts to trading, but from a more logistics perspective. It's not, oh hey Bob, what'd you trade today? Oh, let's see if we can improve your trading. No, 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 no. This is much, much, much deeper than that. So if you're into the psychology of the markets, okay, we talk about that. Not your psychology, as in this is how you should be thinking. No, no, no. No, I'm talking about how do we understand what other people are thinking, the psychology of the markets from that perspective. What are other people thinking here, and how can I make money off of their fear at this point or their greed at this point? That type of stuff. That's what this is all about. It's a really deep, enriching course. Anybody can understand it, but it really takes you to the next level in your trading. So if you're interested in that, send me an email. I'll send you some information on it. If it's a match, great, and we'll get to work on that coming into the new year. Other than that, we'll see you in the next video. Take care, guys. Bye.